Ladies and gentlemen, welcome back to the channel. We have huge news today for Tesla investors, and we're going to jump right into it. But first and foremost, I just want to say I'm impressed the stock is green today. I'll tell you why. Because 10-year treasury yields are almost blowing out today. 10-year treasury yields are up 7.5 basis points. The Russell 2000 down 1.22%. NASDAQ not doing as bad. S&P down 0.32%. Dow is down 0.75%. But risk on today is really getting destroyed. Tesla tends to be one of those stocks that gets destroyed when risk on gets destroyed. Okay, it has a high beta, has a high multiple, high growth expectations. Tesla stock today being, at the time of recording this video, green by 0.05% is outright impressive. But we will discuss this more in depth, what's going on with markets, why risk on is getting kind of obliterated in just a moment. First, let's start with all of your Tesla stock breaking news. So it is confirmed that Tesla will officially open its first showroom in India this upcoming Tuesday, July 15th. The showroom is located in Mumbai. Now, India is going to be probably the largest market for Tesla long term, just due to population size, it's a developing country, and eventually there's going to be a huge market in India. India reminds me of China in like 2017, 2018, right? Where it wasn't this huge market for Tesla, for EVs, but it within, 5, 6, 7 years grew into a massive market opportunity for Tesla. In fact, China is Tesla's most important single country. Tesla sells more vehicles in China every quarter than they do in the US. That changed like 2 years ago. Okay. India is a couple years away from being meaningful for Tesla, but it is a market where if you establish a presence within, you're going to be much better off than other companies. It's kind of like Ford or GM or another American auto company trying to get established in China. Like, very difficult to do so. Tesla was just one of like the first EV companies in China to actually get established. This is the strategy from Tesla right now in India. And here, this article from Bloomberg says Tesla is likely to begin first deliveries in India starting in August. And you could see that invitations for the launch event are going out to some individuals, early reservation holders within India. But before we get into the rest of your Tesla stock breaking news today and what's happening in the broader markets, if you guys have not checked out the link down below in the description of this video for the trading community, come check it out. Come join us. Now, here's a quick rundown of what we are doing over there. This is a very unique service where we are going out and finding small caps, not the bad ones, but the good ones, and investing in those. Searching for the next, 10, 20, 30, 40, 50x stock, even if some of them are not that extreme. By doing the work, putting in the time, we can narrow it down to not invest in the bad ones and invest in the good ones and raise the odds of favorable outcomes. That is what we are doing over there, just to keep it short, sweet, straight to the point, going out, investing in those underappreciated AI stocks, one of which is like, blows my mind that Wall Street does not know about this company yet. I mean, like, it makes zero sense. If I can sit here and identify this opportunity, how can Wall Street not? But I've said that before. When I invested in Nebius at $17 per share, I thought the same thing. When I invested in Applied Digital at $3 per share, or Navaris Semiconductors at $2 a share, I thought the same thing. When I invested in IONQ at $5 a share, I thought the same thing. What happened to those stocks? They all exploded, okay? And we're finding those opportunities essentially before they explode and investing in them. Obviously, not a recommendation, not financial advice. Verify all DD that is posted. I share my positionings, what I'm buying, when I'm buying, how much I'm holding of certain stocks. You'll get my full piece on due diligence for Tesla coming out very shortly in that trading community as well, where I will share my position in Tesla. Also, my biggest position in the portfolio, you would hope, right? But yeah, very unique service. Check that out. Link down below in the description of this video if you have not done so already. Now back to the video. Now, again, as I said, India is a developing country. Tesla vehicles are, from Indian standards, like pretty unaffordable. Okay. When you think about India, there's a lot of people on motorcycles, on moped-like vehicles. A Tesla is out of reach for a vast majority of India's population. That will change over the coming years. But what's really interesting, and I'm probably going to be the only one to point this out, I don't think the launch in India is about selling the Model 3, the Model Y, the S, X, or Cybertruck. The launch in India, to me, reiterates that Tesla will be focusing on a cheaper Tesla product, that the Model 2 is coming. Now, question is, when is that coming? And I think we're going to get a lot more clarity on Tesla's earnings. But the fact that Tesla's launching in India, I think solidifies to me that Tesla is going to prioritize a cheaper Tesla, a Model 2. And I think that is going to be the main product for the Indian market. Now, the Tesla Europe and Middle East X account posted this. They say you can now get our longest range Model 3 ever in the United Arab Emirates, Qatar, and Israel. 702 kilometers of range with Model 3 long range rear wheel drive. So they have started taking orders, presumably deliveries of the Model 3 long range in the Middle East. And Tesla has reduced the Model Y pricing in Canada by $20,000, bringing it back to pre-tariff levels. Only the long-range all-wheel drive is available to order for $64,990, down from $84,990. Also, Diamond Black paint is now available as a $2,000 additional option. And Tesla just opened their first ever supercharger in Maui. It's a V4 supercharger with 12 stalls and charging speeds of up to 325 kilowatts. Definitely looks pretty busy here as well. Transport Canada found no evidence of fraud or wrongdoing by Tesla in its investigation into the company's $43 million in rebate claims under the Incentives for Zero Emission Vehicles IZEV program. The probe launched after Tesla filed 8,653 claims over a single weekend in January 2025, has cleared the automaker, confirming these submissions were lawful and compliant with program rules. Tesla will now receive the $43 million that was previously frozen. Like, what did they think? Did they think Tesla just filed like thousands of wrongful claims? Like, I don't understand why there needed to be an investigation, but it's good to see this and to know, like, hey, Tesla's a law-abiding company. Also in the news today, a Freedom of Information request to the Department of Transport has revealed that Tesla was planning to launch FSD Supervised in Australia in May and June of 2025, but it is being blocked by bureaucracy. Delays in FSD being released is costing lives. And Tesla has created a new Tesla India X account. And we can see that 7.3 million vehicles were recalled in Q2, more than double Q1's number, with the vast majority of them being Ford, and then General Motors, Stellantis, Nissan, Honda, Toyota, Volvo, Volkswagen, Mazda, Mercedes-Benz, Kia, BMW, Polestar, Rivian, Porsche, Hyundai, Subaru, and then you have Tesla. So again, even just with Tesla's recalls, like how many of them were over-the-air updates, like it's a fraction of a fraction of a fraction of these other auto companies. Now, here on the day today, what is mainly affecting markets and causing the sell-off in risk on assets like small caps, okay, and some of the more speculative names. It was the news last night that Trump announced a 35% tariff on Canada starting August 1st and warns of higher levies if Ottawa retaliates. They started retaliating the first time around after April 2nd. They started pulling American liquors off the shelves and American products, so on and so forth. Trump saying, hey, if you start to retaliate, that number's going to go up from there. Trump cited fentanyl as a reason for the tariffs while also complaining about Ottawa's retaliatory duties. Canadian Prime Minister Mark Carney in his response said, quote, Canada has made vital progress to stop the scourge of fentanyl in North America. He says, instead of working with the United States, Canada retaliated with its own tariffs, Trump said to Mark Carney, Prime Minister of Canada, in a letter posted on Truth Social. And separately last night, Trump said that he intends to impose blanket tariffs of 15 or 20% on most trade partners, up from the current 10%. So why is this causing a risk on sell-off, okay, for stocks that are deemed riskier, like the Russell 2000? Well, it's seen that tariffs cause inflation. That's kind of Wall Street's opinion. That's the Fed's opinion. That's a lot of politicians' opinion. It's the wrong opinion, but that's the opinion out there. So as you get higher tariffs, it's seen as less likely that the Fed is going to cut rates. We can see today the probability of a July 30th cut actually still sits at 6.4%, higher than yesterday's probability at 5.3%. But that is what is causing 10-year Treasury yields to rise today. Higher tariffs are seen as higher inflation, which is seen as lower odds that the Fed will be cutting rates. Now, what I really want to point out here, though, is the VIX. Okay, well, the Russell's selling off, the Dow's selling off, S&P's down, again, around a 0.35%. NASDAQ down 0.1%. The VIX is only up 3.5% at 16.33. The VIX is not screaming panic. Even though stocks are selling off today, the VIX is still very low. You're not seeing a big VIX spike, which is a good sign that this is not going to lead into a larger market downturn. That stocks are just doing their own thing, and investors really are not freaking out. The VIX, if you do not know, measures the puts and call ratio on the S&P for 30 days out. Okay, so it's saying, hey, are hedge funds and institutions, retail investors buying puts on this market more than they're buying calls? And today, yeah, there's more puts being bought than calls, but not by a large amount. Okay, you can do the actual calculation if you want to, but the VIX is just telling you, hey, you're only up 3.5%. You're at a relatively low number on the VIX at 16.33. It can go lower than that. I mean, back in 2024, we were 2023 and 2021, we were consistently usually in that 12 range, 12 to 14 range. So it is a little elevated, but really back to more of a normal level, okay? And today, it's not causing people to panic or to freak out, which is the silver lining here. That is the good news. But hey, we'll have to see what kind of trade deals start to get done. Now, the White House today accuses Powell of mismanaging Federal Reserve, citing headquarters renovation that is currently running like $700 million over budget. And Jerome Powell's officially being investigated by the government. Trump says today he will not fire Powell. And I think really the only reason why that he's not actively looking to get rid of Powell is because that would probably be a shock event. Unless there was someone lined up to take Powell's place, I would think that would be bad for stocks, right? If the headline comes out that Powell is fired tonight, let's say, I think stocks would sell off a lot tomorrow. It would likely not be good because it would create a lot more uncertainty who's going to take over, what's their policy going to look like. With a normal transition, like we know Powell's leaving the Fed in May, we have time to like get to know the new Fed chair, whoever it's going to be, get a sense of their policies and price in what that means for markets, what that means for interest rates. Okay. I think that's the only reason Trump doesn't want to fire Powell, is because that would cause quite an issue, I would think, in financial markets and especially in the bond market. The last thing Trump wants is bonds going up, which, to point out, today, again, 10-year Treasury yields are up 7.5 basis points based on what Trump is saying. That works against what Trump wants to do. Trump is on X almost every day screaming about interest payments via the government and the amount of money they have to pay to fund the government, right? To sell treasuries. Well, with what Trump's doing with higher tariffs, I think it's all in negotiations, right? I don't think Trump's going to keep a 35% tariff on Canada. I think Trump just wants Canada to get their act together, start negotiating in good faith. I think that's what it's about. But Treasury yields going up today works in the exact opposite sense of what Trump wants to see happen, which is lower interest rates. Interest rates are going up today, not down, following Trump's statements. The Trump administration warns that U.S. blackouts could double by 2030 due to increased power demand driven by AI and coal plant closures, per Bloomberg. Ford CEO Jim Farley warns AI will wipe out half of white-collar jobs. And Brazil says today that Brazil won't lower its head to anyone. Brazil says if U.S. tariffs take effect, we will reciprocate. And Brazil's Lula says Trump is misinformed. The U.S. does not run a trade deficit with Brazil. U.S. credit card spending on luxury goods fell during the first 5 months of the year compared with the same period in 2024, according to data from Citigroup. Trump on Canada tariff carve-outs, he says, we'll see. Trump says he may talk to Brazil on tariffs at some point. And Trump on Canada tariffs says, quote, I think it was fairly well received. And Trump says to countries ahead of the tariff deadline, now on August 1st, quote, keep working hard. Trump says that Canada called yesterday after the letter was sent. Again, you can see the direction that this is going in. It's a negotiations tactic. It's the art of the deal. Create as much chaos, uncertainty, and fear as possible to give you the best deal possible. And Trump says that Powell is doing a terrible job. And again, I was Team Powell for a long time. But the fact that they cut rates right before the election and now they're blaming tariffs as a reason to not cut rates when tariffs are by definition deflationary, it doesn't make a lot of sense. And I say they're deflationary because it's a tax. All tax ever is deflationary to the economy, to inflation. It doesn't cause inflation. The argument is that tariffs are going to raise prices, which, yes, they can do that if consumers are willing to pay higher prices. If consumers are not willing to pay higher prices, you cannot pass on that cost to consumers. Okay, keep that in mind. It's only able to pass on cost if people will pay higher prices. I don't think people will pay higher prices. This is not 2021. There's not just a slush fund of money flowing around in people's pockets today, largely in the economy with the average consumer. So fine, if companies are able to pass on prices, the idea is that people will go to their employers and demand higher wages. And then that starts a wage price spiral. Those companies pay higher wages to their employees, and then they say, wait, we have to raise prices again. And then consumers go back to their boss and ask for higher prices. The wage price spiral. One, I don't think consumers will accept higher prices. Go ask people out there. The average American is not in a great financial position. Perhaps they're not in recession, but they're not out spending frivolously on random shit. Like, that is not this economy. And the way that tariffs can actually be deflationary and really negative on the economy is if companies cannot pass on higher prices, because consumers are not willing to pay higher prices, what do they do to offset the margins? Corporate America is not going to sit there and go, okay, well, our margins just dropped 2% because of these tariffs. No, they're going to say, hey, where can we lay people off to, help our margins? Or they're going to turn to things like AI to help try to raise margins, become more efficient without laying people off. And I think that's largely the playbook, is not to lay people off at this stage. It is to look to AI, look to different programs and ways to increase margins internally and be more efficient. I actually think tariffs create a great use case for pretty much any company out there. China's Foreign Minister Wang Yi says, I hope that Canada will provide a good business environment for Chinese enterprises to invest and operate. And economist Nouriel Roubini says a mini stagflationary shock is coming in the second half of 2025, as per CNBC. Now, stagflation means higher inflation, stagnating growth. If this is what economists are expecting, if this is what a lot of people on Wall Street are expecting, stocks are going to rip higher, because I don't think you're going to get stagflation. I don't think we're going to get any inflation at all from tariffs. None at all. I don't think the consumer is willing to accept higher prices. If people stop buying your product, you're not going to pass on price increases. And it's one of those things where, like, you really got to, feel out the consumer, right? Because once you raise prices, like, the damage is done. Okay. And if you're a company and you raise prices and do that damage and people stop buying your product, damage is done, dude. You're screwed, right? That allows for competitors to come in at lower prices and steal your market share. That's why even like a company like Levi's said last night on their earnings call that for now, they're not passing on cost of tariffs. And they actually raised guidance. Funny how that works. Now, we did not really have any economic data today, so kind of a slow day as far as the economic calendar. But next week is going to be massive. Okay, let me just give you a sneak peek here. Tuesday is huge. You're going to get core CPI month over month. The expectation is 0.3%. Last month was 0.1%, and the forecast is 0.2%. This is the first month, at least data for June for CPI, that pretty much everyone is expecting some inflation to show up. The Fed said that last night. Wall Street is largely under that assumption as well. If we do not see inflation show up in the June report, the odds for a July rate cut are going to skyrocket, and the odds for really no inflation coming via tariffs are going to go up a lot. That is going to be the deciding factor, I think, in what happens to markets, at least in the kind of short term here, right? If we get a low CPI number, I think stocks are going to explode higher on that. If we do get a high number, I don't think it's the end of the world for markets either, because, hey, 1 month doesn't make a trend. So I do think the risk is really tilted towards stocks moving higher in the early part of next week following CPI. Again, with a low report, fantastic. Inflation is not showing up. If we do get a slightly higher report, you can't write off the inflation story as now we have an inflation issue because 1 month came in high when the last 4 have come in at virtually nothing, right? So I think maybe a little bit of consolidation in markets, sideways trading heading into Tuesday, and then you get the larger move with CPI. The CNN Fear and Greed Index today holding on to extreme greed, currently at 75. That is the last point in the first point, the last point in the extreme greed category. Market momentum is greed, stock price strength, extreme greed, stock price breadth, extreme greed, put and call options, extreme greed. Market volatility is neutral, safe haven demand in extreme greed, and junk bond demand currently in extreme greed as well. We did get a new AI investor sentiment survey that came out yesterday as well that honestly looks pretty good. Bullish investors at 41.4%, neutral at 23.0%, and bearish investors at 35.6%. So there still is a healthy level of bearish investors. There's still that wall of worry to climb. And it's kind of surprising that we don't have more bullish investors as stocks have just ripped to new all-time highs. Like, you would think most people would be pretty bullish at this point. You're not. And that to me means we probably still likely have quite a bit of room to move higher. Again, we have to get through CPI and important catalyst as well, but I think there is plenty of life left in this market. And I still think by the end of this year, the SPY is going to hit 700. People are going to be shocked, but I said this, back, in May when we needed an over 20% rally to get to 700. Now, considering where markets are at, you only need like 12% rally from here to get to 700 on the SPY. That doesn't sound as big as it did when we needed a 22% rally to get to 700. So we've already been right for a while, but I do think this market is going to continue higher as we get later into this year and as we focus more and more on 2026. The investment thesis for next year is as strong as ever. And we'll talk about that more in depth in the next video, and especially over this weekend. But the percent of stocks trading above their 50-day moving average falling quite sharply today. About 5% of stocks are falling below their 50-day moving average. So a nice little reset, to say the least. Currently at 70.18%. So you're on the high side, but really it just shows you there's a lot of stocks that, have recovered from the lows. There's a lot of stocks that are above their 50-day moving average. We just went through a 20% crash. I would hope that most stocks would be above their 50-day moving average. So that to me just looks pretty normal overall. And Tesla stock at the time of recording this video is up 1/3%. You are above this trend line from the lows, connecting the lows we obviously had in April, the mini low we had towards the end of April, the low point we had on June 5th, and some of the recent, levels we had on July 1st, for an example. You're getting back above that trend line today. And as long as we close green today, you're going to close above that trend line. And that looks super solid to start next week. Now, we have to get above your, 200-day moving average at $310.70. $316.22, and then your 50-day moving average at $320 per share. Once you get above those, then you start to look at larger upside, which I believe happens after Tesla earnings. But again, we'll talk about that more over this weekend. My expectations around earnings and why I'm so bullish on Tesla right now. So with that said, let me know your thoughts on all of this down below in the comment section. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video as well for the trading community. Also, enjoy the rest of your day, and I will see you in the next one.